It's a fantastic day
Hello,
for
Eleni.
all investors and most economists because there's just so much news that has filtered through. I think let's start off with China, where we saw the official PMI number hitting 53.1, and that's an 11-month high. The HSBC number not painting not such a rosy picture, so it seems that there's a bit of a discrepancy between the two.
Bit of a strange one, that, Eleni. Yes, very much so. You know, you would have thought that the official measures and the HSBC measures would be broadly in line, and I think the only reason for that can be either there was a bit of an overhang from the Chinese New Year, which has been made up with respect to the official numbers, or maybe the official numbers are being padded out slightly. I mean, there is also the fact that both measures actually don't cover the same sort of area. The HSBC measure covers the slightly smaller businesses, smaller firms, whereas the official numbers actually cover the more broader and the bigger firms. So I think let's not read too much into that for the time being. Let's see what the services PMI comes out at tomorrow morning and see where we go from there.
Because the US PMI number looks also very strong, ISM sitting at 53.4 points. We also know that the Eurozone numbers are not looking fantastic, so it seems that we have a few spots that are doing quite well and others of course are disappointing. No surprise that the Eurozone is disappointing at this stage.
I'm afraid it's not. It's been a game of two halves here, really, in Europe. I mean, European equities have been trading very cautiously this morning, really predominantly on the back of that very, very poor manufacturing data that we saw out from across all the Euro regions, not just the periphery, but the core as well. France manufacturing PMI hit its lowest level since June in 2009, coming in at 46.7, you know, which was much worse than expected. Unemployment is still rising in the Eurozone. Italian unemployment is above 9%. Yet here in the UK, our manufacturing PMI appears to be going from strength to strength, which is somewhat surprising when you consider what the OECD said about the UK economy last week, when they said that Q1 was you know, already in contraction and we're in a double-dip recession. That now looks to be completely false.
Yeah. Okay, so I mean, when you see what is happening in the Eurozone, when you look at the unemployment rate at 10.8%, and it's said around 17 million people out of work, I'm sure this number probably is much higher. Peripheral Eurozone are the people that are suffering the most at this point. Do you think that there's going to be a reprieve into this year, or do you think there's a few years to come of very high unemployment?
Regrettably, I think that could well be the case. I mean, these LTROs were supposed to really filter down into the banking sector in Europe, and there's no evidence that that is actually happening. You've actually got banks within Europe saying that they're going to look at starting to repay some of the money that they borrowed from the ECB by the end of this year. You know, and when you're talking about austerity and you're talking about spending cuts in an economy that's already in recession, really you have to wonder where that extra money to basically stimulate demand and stimulate growth is going to come from.
Okay, well, when you say that you believe that the LTRO is now filtering through into the real economy, how so? Because we actually saw, for example, what we saw in the US with the TARP money, they also started to pay back quite quickly. And then when we saw the earnings coming through from the banks, it seems that a lot of the profits that were made were through investments and just putting money into high-yielding areas.
Well, as I say, I mean, the European banking system, I mean, there's so much bad debt at the moment that I think what a lot of these banks are doing is they're using it to basically build up their Tier 1 capital ratios in time for these European banking, these EBA regulations that say that by June, these banks have to have a Tier 1 capital ratio of around about 9%. Now, you know, if they're getting this money, you know, what are they doing with it? Because, as I say, there is no evidence that the money growth within the peripheral economy is actually growing. It's contracting. So if they're not putting it into the economy, they are obviously putting it on deposit overnight at the ECB, because we're certainly seeing in the stats of the ECB's overnight rate or overnight deposits that they're actually at quite high levels, around about 700 or 800 billion euros.
Okay, Michael, so that's quite an interesting observation. Do you think that, well, what kind of scenario do you think we'll see going forward? Because this money was, I suppose, supposed to be used to filter through into the real economy, but also to allay fears of any kind of banking crisis. So who are we really bailing out here?
Well, we're bailing out the banks.
Yeah.
I mean, what was happening before was you had a freeze up in the credit markets. Banks wouldn't lend to each other because they didn't really know how much bad debt each banks had exposed to the sovereigns. And I think therein lies the nub of the problem. There's too many banks at the moment that are not doing or fulfilling the function that a bank needs to do, and that's to lend money into the real economy. So I think what really needs to happen is that they need to recapitalise these banks and write off a lot of this debt in the same way that they've done in Greece.
We also heard a few rumours coming through that Germany's Bundesbank stopped accepting bonds for Portugal and other peripheral countries, which was being used as collateral. And we know that the bank has actually denied the reports. Have you heard such rumours, and do you think that they could actually be true?
I have heard those rumours, and I have also seen the denial. Whether or not they're true, I would be very, very surprised if they were, because I think they would remark a complete policy shift for the Bundesbank with respect to this particular crisis. But I think what we've seen today, equity markets are generally higher, but if you look at the banks are actually lower. So I think the markets are nervous about that, because it's certainly a rumour that hasn't really been readily touted about before.
Very quickly, if we could also just touch on the fact that a lot of banks are starting to turn their calls on European equities to neutral and even negative. Are you hearing this, and are you experiencing this on the ground, that suddenly we're seeing this bout of negativity, despite the fact that we've heard from policymakers that will do anything to ensure that the Eurozone nations do not fall apart?
Well, it depends what you define by anything. I mean, Germany has been reluctant at every turn of the screw to really come in and step up to the mark. And I think a lot of the problem here is political. I think going forward, if we're going to see equity valuations increase, we have to see some evidence of growth, not only in the US, because we are seeing that right now, but also in Europe and also in China. Otherwise, this 20% move higher in equity markets is going to be very difficult to sustain going forward unless we continue to see a pickup in economic activity in Europe.